Hopefully this is going to be the final video for accounts payable. I think I've explained enough detail. I suggest that you enter a dummy profile. If you go back to businesses, you can set up a dummy profile, because with Easy As you can have up to 5 businesses. And if you've got a spare profile here, set up a dummy business. Then go ahead and set up some accounts and mess around with it, folks. It's all about playing. Mess around with the program, mess around with accounts payable or accounts receivable, and work out how best to use it for you. You know, you might actually get some of your actual invoices and stuff you received over the last couple of months and enter it up as if you were entering it in your accounts, and play with it and see how best it's going to work for you. So when you come back to your actual business, you've already worked out how you want to keep your accounts payable and accounts receivable, and you get it right from the word go. A bit of time playing around and messing about is going to save you a lot of mucking around later. Because if you do it one way and you have to change, you're going to have to delete entries and go back and sort it all out. Oh, what a big mess. You don't want to be doing that. Okay, now to finish off this accounts payable video, I just want to discuss another aspect. You have what's called aged reporting. Now, it means that if I click this icon here, it means it shows me that for Bill's Hardware, I have items on account that are over 300 that are over 60 days. So between 31 and 60 days, I have an amount of $320 outstanding on his account. Between 61 and 90 days, I have this amount here. So it means I'm overdue. If he said I have to pay my account within 30 days, I have these amounts outstanding. Now, they could be valid. They could be amounts I'm disputing. So that's why they're existing. So this age reporting lets you see if you have amounts on account that haven't been recorded or haven't been paid. And it allows you to see how old these amounts are. Now, there is another icon here. In the accounts payable and accounts receivable, you have this actual age reporting is available. And you on the end of the line here, you have a icon here. And what this will do, if we have another quick look at this, see how it lists Bill's Hardware, and there's 2 entries here between this period and this period which are outstanding. Now, we don't get to see the individual entries, but if we look at Bill's Hardware and we print this one, this shows us the individual entries for this account. It shows us the same thing we saw a minute ago, but it's for Bill's Hardware, and it shows the actual entries. See that? It shows us what the dates, what the purchases were that are outstanding. So we can look at that and go, okay, these are the items that are in dispute. You can send it to him and say, I dispute these items. Okay, so if you look down the bottom here, we can set up the standard age reporting here. That's the standard age reporting. So if that's the default age reporting. The system defaults to this period for accounts payable. But you might have 4 or 5 different accounts with 4 or 5 different people, and one person might give you 30 days to pay your first payment, and the next person might give you 60 days. So then that won't work. So what you can do is you have date due aged. This is for 2 different things here at once. So if I click this icon here, look what happens up top here. This all changes. See that? This is an entry area. It's not that that's going to stay on the screen. This is just so you can do setup. What does all this mean? And I say that this particular Bill's Hardware gives me 60 days to pay up front. And so for all intents and purposes, I want to see if I'm over. So you'd normally add 30 days, so you get to see if you're over. If I turn this on, then I get to see on the screen then, right? I get to see that I do have individual aged amounts that are different from the standard settings. That's what that's for. It says I have individual amounts, because if I see the aged report for overall, I don't think he's going to appear. No, he does appear. Okay, he does appear on the age reporting, but we know that's not going to be correct, is it? Because he has its own age reporting. Okay, so then we get to see, it gives us a little reminder that this particular person here has its own specific set of values for dates due. If we leave these 2, we know that they're the standard default methods. And if we didn't do that, if I didn't tick that on, how would we know? We wouldn't know. We would assume that we still had the same set of default values. So you need to turn that on. I would switch it on, and that puts it on the screen. So that's what that's for. You can change that for the individual client. So that way, when you do actually preview this, it comes up and reflects that information for this particular individual client. And if you look at another one, well, he doesn't, because he defaults to the default settings, the individual settings. So see that? The individual settings for each individual person. So I'm going to change this here and go back to here. And I want to look at this date due column. What is auto due? Auto due on. I know what that's for. Auto due. Let's have a look at that. If we go into this particular client here, it turns on the auto due. It just means that if I enter a date here, say I'm entering an entry of 18th of June, that I picked this up, that I've purchased this item on account. The moment I press enter, see, it added that there. It added 30 days to that. And it automatically calculated that for us. Rather than us individually putting that amount in, it turned the auto due on for us. So, what that means is we can select something else here, because we might say automatically we want it to record 60 days or 45 days before payment's due. So that helps us if we are using clients' money in, as I mentioned before, you might be using particular bits of money in term deposits. So you want to make sure that you take it out before you pay accounts. So that turns on the auto due. So this here obviously is obvious. It allows you to see change the period length of time. This here gives you an alert. It just changes the color. So what that means is this: if you've got 3 days left, so let's have a look at this. This here is set for 3 days. So let's just jump back. Sorry, I got out of that. Let's just jump back into here again and look at him. Let's say that this was different. I'm just going to change this date because I need it to reflect. Okay, so as it comes closer, so as each day gets closer and closer, so if I change today's date and add another 2 days to it. Let me add another 2 days to that. No, I need to add probably 3 days to that. Whatever. I'm going to make it the 27th here, right? I'm going to exit out that screen. I'm going to come back in. 3 days. Nothing. Interesting. Let me add one more, guys. One more day. Maybe it's 3 days and above. Go back in that screen. And there we are. So greater than 3 days, it brings up an alert. It says, it shows you. So if you've got a number of entries on this screen, you can say, oh, hang on, I have $2,000 here that I'm due to pay on account in 2 days' time. Okay, so it must be greater than 3. So if you change that 3 and I change the individual number here, I keep clicking the wrong stuff, don't I? That might not be right. I might say I want that to actually be 6 days out. So anything greater than 6 is going to come up. So if I change this date now and take it backwards a couple of days, because less than 2 seems too close, doesn't it? This allows you without doing manual calculations, you can see at a glance things that are due. So if you do have money spread around the place, clients' money and term deposits, which is how a lot of businesses do. That's why a lot of businesses don't pay their accounts on time, because they have money on term deposits. They won't tell you that, but they do. Oh, we're up to enter that, going into here again. Okay, more relevant now. So it's greater than 6 days. So here we go. It lets us know you've got 4 days to pay this account. So at the same time, you don't want to be late with paying your accounts. So you want to make sure that if you've got money spread around, you pay them. Or it might be that you might not use it for that purpose. It might be that you know that you haven't been paid by your client and you want to get money out of your client so you can pay this guy's account. Okay, so that's what that's for.